In this video, we are going to discuss about Rbwm in English, and this is the second chapter related to it. Do subscribe to the channel right now, and if you want to watch the previous video, you can be following the same video on our website jaib.learningsessions.in, and also on sign up, you'll be getting access to all the PDFs free of cost at one place. So do sign up right now and start preparing for the same. The website is jaib.learningsessions.in. You can also be finding the link in the description box below. So let's start the session over here, and it's related to retail banking and role within the bank operations. Now, when we are talking about the approach, it's actually related to that what type of particular method or strategy that is adopted by the bank so as to basically manage the retail banking services, so as to basically operate the services over there. That's basically said to be an approach over there. And further, we are having three different approaches. We are having the strategic business approach, we are having the departmental approach, and we are having the integrated approach. First of all, it's related to what? It's related to strategic business approach. When we are talking about the strategic business approach, we are actually talking about that we will be organizing the retail banking services as a separate unit or division. So it will be a separate unit. Let's say case that we are having a banking unit over here, and the retail banking unit will be separate from this particular banking unit over there. It will be a separate division over there. Let's say the case for MSME purposes, the different segment is there. That's particularly a SBU, that is a strategic business unit out there, right? And further, the profitability for the same, the strategy for the same, performance management for the same will be managed individually, okay? And after that, it's related to departmental approach. Now, in case of departmental approach, let's say case that we are having a business entity of its own, and further within the business entity will be having a single department which will be managing the retail banking segment over there, and they will be handling the different tasks related to like customer service, lending, operations, etc., right? And further, the third one is related to integrated approach. Now, integrated approach is related to when the full organization is integrated in such a manner that all the different functionaries, departments are particularly integrated together, and further they have all been managing and integratedly providing the services for the same, right? Different functions and processes of the organizations are integrated and working all together, right? That's an integrated approach. So we are having three approaches. One is related to SBU, that is strategic business approach. Second is departmental approach, and the third one, it's related to the integrated approach. Now let's consider the business model. Now, what do you mean by business model? Like I told you that we are having the approach or strategy related to the same, which a bank is actually particularly adopting so as to generate the business, so as to basically deliver the value to the customers, or the managing the retail banking operations out there. That is the business model. That is a business model. Okay, so there are many things which are covered in that, like what is our revenue stream, how our retail banking activities are performing, and further what will be our target market. Now that's actually related to business model, that how our business is going to function so that we can be profitable into it, right? And what are our distribution channels out there, what will be our cost structure, all the things are covered into it. So business model for retail banking is actually covered into three parts. One, it's related to traditional branch based model. Second one, it's related to the digital banking model, and third one, it's related to direct banking model. First of all, it's related to traditional branch based model, like we are already having the branches out there which are providing the services directly to the customers, where the accounts are being opened or the customers can be visiting, and for the marketing the transactions over there. So that's related to the traditional branch based approach. Second one, it's related to digital banking model. Now in case of digital banking model, it actually do operate the retail banking operations through the digital channels. Like we are having the internet banking, we are having the mobile banking, we are having the mobile apps, we are having the kiosk system over there. That's related to digital banking model, right? And the third business model we are going to talk about, that's related to the direct banking model. Now, particularly in this scenario, there we need not to operate through the physical branches, and we do basically rely on the, like say, remote channels. Like what remote channels? Like we are having the business BCs with us, we are having the BFs with us. So they are actually doing what? They are actually providing they are catering the services to the customers out there, and they are offering the banking service through the online or telephone banking out there, right? That's related to direct banking model, right? And that's all about the second unit of the retail banking module. And further, the third one, it's related to retail banking concepts. Now, first of all, it's related to what? It's related to business process structure in retail banking. So when we are talking about the business process structure, that how the different processes in the organization are structured. Now those can be horizontal, those can be vertical, those can be predominantly horizontal, or those can be predominantly vertical processes there. Now as per the BCG, that is a Boston Consulting Group, they basically conducted a study on the retail banking processes, that what different processes are there, right? And what do you mean by business process, that how we can transform our services, how the data is particularly integrated between the different processes out there. Like if I'm saying I'm having the different processes and the data is not shared between these all, that's particularly horizontal. Let's say all the data is available horizontal level only, right? That's a horizontal approach. When particularly data is being shared in vertical chain manner, that's a vertical approach. When particularly we are having the data in the horizontal manner, but there is centralized data also, that some of the attributes are shared, right, centrally, that's particularly predominantly horizontal. Particularly we have the model out there, right? That is actually related to it. That study was done by whom? That was done by BCG, that is a Boston Consulting Group, right? Now the model which we'll be using, that actually depends upon that at what type and what kind of information is available, and for the how the information is going to be used, and further it is going to be used for the multiple products or multiple product offerings over there, that particularly related to it. Now when we talk about the business processes structure, we are having the four processes with us. Process structure over there, we are having the horizontal organized model, we are having the vertically organized model, we are having the predominantly vertically organized model, and last one we are having the predominantly horizontally organized model. Okay, so first of all we are going to cover about the horizontally organized model. Now in this scenario, each product is actually treated as a separate module. So each product, let's say P1 is different product, P2 is different product, P3 is different product. Now they will be treated as separate module, and they will be having their own process model. That for this particular product, the process model is different. For this product, the process model is different, and for the P3, the process model is different out there. And this particular approach basically helps us in what? This actual approach helps us in designing that we can be customizing the different products. And for the, let's say case, I want to basically customize this product. Now I'm having the different process for the same, I can be customizing it easily, right? And further we can be managing the different types of product, we can be optimizing the processes, we can be delivering the tailored solutions for the customers over there, because each product is having the different process model associated with the same. The next one, it's related to the vertically organized model. Now in case of this particular vertically organized model, like across the products, the vertical customer database orientation is provided, that you are already provided with the customer database that can be used across the different products out there. Let's say case that I'm having different products, and further there are different process models, but the customer database which is present over there, that is common to all, which can be used under the different processes, which can be used for the different process models. That's actually related to vertical organized model. The third one, it's related to predominantly horizontally organized model. Now this is actually mostly the product oriented. Like I told you that you're having the different products are having the different process models over there. That's related to P1, P2 and P3, and further it's related to, but some common information is there. Like I told you in the previous scenario that the customer particular designation or customer specification can be built easily in the case of horizontally organized model, but in this scenario also that can be done, but still there are many other attributes which are common among the different scope of the customers, right? That's predominantly horizontally organized model. And when we talk about the predominantly vertically organized model, in that scenario, that's particularly a vertically organized model. Like I told you that we are having the different process model for P1, P2 and P3 over there, but some of the data which is basically shared along the customers over there, but common information will be available for most of the different products. That's a predominantly vertically organized model. So we are having the different organized models for the products, and particularly we are having four types: horizontally organized model, vertically organized model, predominantly organized model, and for the predominantly vertically organized model. For this related to implementation model, now what models we can be implementing over here? First of all, it's related to end-to-end outsourcing. That whatsoever you are doing, you are basically outsourcing the same. So whatsoever the processes, activities, functions are to be performed, let's say a case IT is to be managed or back office operations are to be done, you're basically outsourcing the same things. That's related to end-to-end outsourcing, and it's related to predominant outsourcing. Now when we're talking about the predominant outsourcing, in this scenario we are actually outsourcing outsourcing significant portion. We are outsourcing significant portion, but some elements are actually remaining in-house that you are basically working upon them yourself. Let's say the case it's related to KYC or network management, vendor management. You're doing it at your own pace, at your in-house activity, right? And you're not outsourcing the same. That's related to predominant outsourcing. That significant portion is outsourced, but not all of them. And for the partial outsourcing, now in this scenario, it's basically showcases what, that only a smaller chunk of the portion, let's say case this chunk of portion is outsourced and rest all is in-house. Rest all is in-house. In retail banking, partial outsourcing could be seen in the case of payroll management, human resources, marketing campaigns, etc. Those things are being done in-house, right? And for the in-house sourcing, when you are doing each and everything, entire business is being managed in-house. Now particularly when we talk about, like, let's say case when we're talking about the critical operations, those are actually in-house, like core banking, compliance, risk management, customer relationship management. Those are done in-house and those are not outsourced, because you want to have the control, you want to have the security, you want to basically go for better compliance. That's the fundamental attitude. Okay. And then we are talking about the implementation of different models. Like I told you, we are having end-to-end outsourcing, end-to-end outsourcing. The other one, we are having the particularly, let's say, dominant outsourcing, or particularly, and further we are having the partial outsourcing, and for the in-house model. So we were having the different models, right? So most PSBs, that is the public sector banks, are only the using the in-house resources in retail banking. They're using the in-house resources in case of retail banking, like some of the activities that like related to ATM or credit card, debit card, those may be outsourced because they are not having they're having lack of those particular facilities for in-house. And further, when we're talking about the old private sector banks, they are also doing the activities in-house only, right? They are basically majorly using in-house resources only, right? But when we talking about the new generation private sector banks, so when we talk about the public sector banks or we talk about the old private sector banks, they are particularly using the in-house resources only. But when we talk about the new generation private sector banks, they are particularly using a balanced mix. Like many of the activities are being outsourced and many of the activities are being in-house over there. And further, there is actually a huge shift toward the outsourcing because they are relying on outsourcing over there majorly, right? That's the fundamentality to the new generation private sector banks when we're talking about the new generation private sector banks. And also in the case of foreign banks, they are mostly outsourcing each and every of their activity, mostly outsourcing each and every of their activity. Now after that, it's related to product model in retail banking. Product model in retail banking. So we are having the liability products with us, we are having the asset products with us, and we are also providing other products and services that is actually related to fee based income that we are having. Now when we're talking about the liability product, so when we're talking about liability product, it's like basically means that what is a liability for a bank. Let's say case that you have, your bank has accepted a deposit from a depositor. In that scenario, it's a liability on the bank because there is a liability that bank is to pay back that particular sum of amount. So there is a liability product. So whether we are talking about the saving fund, whether we are talking about the current accounts, or whether we are talking about the term deposit that's actually related to RD or FD, it's related to liability product. It's related to the liability product. Now you already know about the saving accounts and current accounts. There is nothing new in that, right? Basically, you allow the customers that they can be depositing the money into the accounts, and further, whensoever they do demand, they can be basically withdrawing it, right? That's actually related to saving account, and that is why it is said to be the saving account deposit. And for the current account deposit, it is said to be demand deposit. It is said to be demand deposit, right? And for the, when we're talking about the RD, or particularly we are talking about the FD, RD is recurring deposit, FD is fixed deposit. We say it to be term deposit. We say it to be the term deposit. Now in case of demand deposit, a very little or no interest is paid. Like in case of saving account, a very small portion of interest is paid, but in case of current account, no interest is paid at all, right? And further, there are huge facilities which are given, like you are provided with the checkbook facility, you are provided with the overdraft facility. In case of current account, you are provided with some other facilities like internet banking, mobile banking, etc. Right? Those particular things are being provided in these particular scenarios, right? And further, after that, it's related to importance of liability products. Let's have a look at it. So when we are talking about the importance of liability product, if we're talking about the core deposit, when we are talking about the core deposit, what does it indicate? We are talking about the CASA, that is a current account, and saving account deposit. Okay, now when we are having CASA, it is less volatile, it is having the stability, and further comes from the retail deposits. And further, the retail investors or retail depositors are less willing to bargain. It's not the case that you're going to bargain as the corporates do, right? So you are particularly having the actually the deposits at the lower interest, and further you can be lending them at higher interest. That's a very good spread, right? As we have already talked about it. And further, as I told you, that you can be having inexpensive funds from the retail customers and a solid client base is there, because you are dealing with the mass market. You're actually dealing with the mass market over there, so lesser volatility is there. Definitely, that's also a benefit of the same. Now after that, it's related to retail asset products. So when we are talking about the asset products, we are going to talk about the different type of loans or credit facilities which are being provided to the customers. So it can be in the form of personal loan, like for the personal usages, you are basically lending to a person over there. That's a personal loan, and it can be a home loan for home development or home construction. It can be auto loan for car, motorcycle, two-wheeler, three-wheelers, etc. And further, they can be another important asset products also. Like it can be helping bank a lot. It can be helping bank a lot because the bank will be having the benefit of diversification and better yield is there. There is good revenue from the funds deployment, and particularly, let me tell you that the consumer loans are having lesser risk involved, and there is having lower NPA perception. Like if I basically say that I'm having total 1000 loan account, it's not the case that 900 will be NPA. It may be the case that 100 will be NPA maximum, or 50 may be NPA. So we can be saying that a lesser percentage of NPA is there, and further it improves the lifestyle and fulfill the aspirations of the people, because they can be now having much more money with them. It boosts the economy also, and further involves minimum marketing efforts, as it is a demand driven economy. It basically based upon the demand driven economy. The demand is basically like it's a pull side reflection, because people are asking themselves that they want to take a loan for their business, or they want to purchase a car, or they want to basically construct a house of their own, something like that. Further, it's related to other products and services. So we are having the credit cards, like the credit cards are being offered by the banks, and further the bank do earn interest upon the same, and further the bank also levy many charges upon the same. So it's also beneficial for the bank that when they are basically launching the credit cards, right? And particularly it's a secondary product. And other than that, the banks are also offering insurance products like health insurance, life insurance, general insurance products are being offered to the existing customers, and it's kind of cross selling, right? But the bank earns the commission upon the same, right? And further, it's related to investment products, like the banks are selling mutual funds, stocks, bonds, other investment options to the customers, so that they can be investing and further they can be growing their wealth, right? So these are the different products, or we can say tertiary products, which are available, right? Further, it's related to product development in retail banking. Let's have a look at the product development in retail banking. What do you mean by that? That we will be actually, product development is actually related to a process. It's a process where we'll be looking into ideas that this kind of thing may be required by the customer. We will be designing a product keeping in mind that particular idea. We will be screening it, and further we'll be launching that particular financial product in the market, right? So that's related to product development. Let's understand this. So it involves, we are going to identify the customer needs. First of all, we'll be identifying the customer needs. We'll be conducting the markets research or surveys. We'll be designing the innovative solutions for those problems, and ultimately we'll be implementing the strategy so as to launch a new product so that those products can be brought to the market, right? So the process of product development includes what? First of all, conducting a market survey. We need to conduct a market survey. We need to have the insights about the market. We need to collect the data about it. We can be conducting the surveys, interviews, focusing on the groups. We can be analyzing the existing market research or pattern out there, and the goal is actually related to what? That we need to understand the customer preferences, we need to understand the customer ideas, what they actually do require, and if there is any gap between the same, that let's say this particular service is available, this service is not available, now whatsoever the gap between the same, we need to basically find out that particular gap so that we can be working upon it and new product can be launched based upon that, right? And further, we need to identify the needs over there. That's the second thing, that the banks identify the specific needs, like the pain point of the target customer, that they are basically facing the issues related to the same. We must be clearing the identification of the customer needs that actually ensures that this particular product is actually addressing the pain to the customer or not, right? Or particularly we are offering a solution for the purpose or not, right? That's the main thing related to identifying the needs. And the third one, it's related to developing the product. Now based upon all those things, you need to develop the product. You'll be basically developing the prototype, and for the product features, attributes, specifications, those are particularly aligned with the customer needs or not, you will be developing the product. And the fourth one is related to pilot testing a sample universe. It's not related to that you will be launching the product of the in full phase. No, it's not like that. When you have developed the product, you will be launching the product to a limited market. You'll be launching a product to the limited market, that is said to be what? That is said to be conduct pilot testing, right? Now it will involving selecting representatives, sample particularly which will be representing a sample space in the universe over there, and will be offering the product to them on a trial basis. Will be recording their feedbacks, and further if there further any refining is required in the product, that will be done. Okay, so that those all things are to be done, and that's the next part. Let's get the feedback from the customer out there, and for the fine tuning of the product based upon the feedback, and final rollout in the market over there. Now basically when you have made all the changes, you have taken the feedback from the sample customers, representatives. Now after that, the final product is to be rolled out, and further the marketing and sales team, they do work together so that they can be creating the awareness related to the new product, so that they can be promoting the product over there, so that they can generate the demand among the intended audience out there. That's final rollout. So what are the different processes out there? First step, it's related to conducting the market survey. Second one, identifying the needs. Third one, developing the product. And fourth one, pilot testing, and further getting the feedback from the same. That's the fifth step over there. The sixth step, it's related to fine tuning of the product, and further the seventh one, it's related to final rollout of the product, right? Now let's understand the process models for products and services. Now either it can be total, all the services are in-house, or it can be related to some of the services are in-house or some are outsourced, or it could be related to entire processes outsourced. It could be related to entire processes outsourced. So there are three particular models. One, it's related to in-house, and partial outsourcing, and total outsourcing, right? And further, I told you already that PSBs and old private sector banks are actually following majorly in-housing of the services, and a limited part only is outsourced. And when we are talking about the new generation private sector banks, outsource is actually partial over there, and we're talking about the foreign banks, entire process is outsourced in that scenario, right? Now let's understand the pricing of product and services. Definitely when you are charging something that's related to cost of providing the offerings or services to the customer, that must be competitive enough, that must be demand driven, that must be based upon the competitive pricing over there, and that must be in such a manner that the product must be a value to the customer, right? So we must be keeping in mind all the things, and pricing of the product basically consider this all things, right? Now first of all, it's related to PSBs. Now in case of PSBs, that is a public sector banks, the pricing is market driven, market competition driven, that whatsoever the market competition is there. Let's say the case that SBI reduce the home loan interest to 7.70%. Now it may be the case that PNB the very next day or very next week, they'll also be reducing the interest rates, right? Okay, so that's related to what? That's related to market driven or competition driven over there. And also it depends upon the liability management practices. Like if let's say the case, my average cost to me is actually not lesser than 7.70, how come I can be offering the product at 7.70? That's not possible. So aggressive marketing and pricing strategies are being offered, and also it's related. So aggressive pricing strategy is actually built so that we can be attracting new customers, and further we can be encouraging the migration from other banks in case of house loans especially. And further, PSBs often follow a step-up pricing model. Now what do you mean by a step-up pricing model? That initially they will be offering lesser rate of interest, and after a certain period, let's say the case after 3 years or 4 years, they will be charging more interest, right? That's actually related to step-up pricing model, which is actually involved in case of the PSBs over there. And further, it's related to new private banks and foreign banks, and pricing fundamentals in case of these particular banks are quite same. However, these banks are more aggressive. If we talk about the pricing strategy, they do provide the deviations, they do provide different interest to the different customers out there, so they are very much aggressive about the same, right? And further, it's related to price structuring for products and services. Price structuring for products and services. First of all, it's related to standalone pricing. Now product and services individually priced based upon the factors Standalone pricing means, let's the case that I'm having this particular product. Now the pricing of this product P1 will be based upon its cost, will be based upon its market demand individually. It's not actually dependent upon any other product or particularly dependent on the bank profits over there. It will be priced individually, right? Basically that is why it is said to be a standalone pricing over there. Now pricing decisions are taken by the volume we are able to sell or the quantum we are able to sell or relationship with the customer over there. That's actually the standalone pricing. The second one is related to price preference or rebates over there. Now when we are getting the high value deposits or long term relationships, we may basically be giving a special quote to the customer. Let's say the case that there is one customer who is going to basically give FDR of rupees 1 lakh, and there is one customer who is going to give you a FDR of rupees 10 crore. Now definitely the person over here seeks some special attention because there is some special quote can be given or concessional rate can be given, right? And also let's say case there is a loan demand for 1 lakh rupees and there is loan demand for 1 crore rupees. Now definitely you can be giving some deviation in this particular loan demand over there, right? So rebates or discounts may be provided upon particularly completing the repayment schedules over there. So that can also be the case. And further the pricing can also be based upon the volume and quantum basis pricing over there. Like basically when you're designing the pricing structure, it may be the case that you are working on economies of scale. Let's say case if you are having that much volume, in that scenario you will be providing this particular pricing. If you're having that particular quantum, you will be pricing the product actually based upon that, right? So that thing can also be there. Further, it's related to the additional pricing models. It's related to the additional pricing models. It may also be the case that let's say case you are not providing any kind of rebate, but you are saying that we will be providing free of cost remittance services to you, or will be waiving the service charges over there, processing charges over there, or additional service charges over there. Now these particular incentives or cross-selling initiatives can be there so that overall customer experience can be enhanced. Okay, so that scenario can be there. So particularly when we talking about the pricing, we are having the standalone pricing, we are having the price preference or rebates over there, or discounts or rebates over there. We are having the volume or quantum based pricing, we are having the additional pricing models over there. Further, it's related to the differences between the retail banking and for the corporate banking. So it's related to the difference between the retail banking and the corporate banking. Let's have a look at it. First of all, it's related to segment. So when we're talking about the retail banking is targeting the individual customers, whereas in the case of the corporate banking, we are targeting the corporate clients over there. And in case of particular approach, we are talking about the business is actually going to deal with the customers, individual customers over there. Whereas in the case of corporate banking, you are going to deal with the businesses itself. So it is B2C approach in case of retail banking, and in case of corporate banking, it is B2B approach, right? And also if we talk about the risk factor, the risk is widespread in case of retail banking. Why? Because you are dealing with millions of customers out there. But in case of corporate banking, the risk is not diverse that much because your customer size, ticket size is quite big. Ticket size means what? Let's say in case of retail banking, averagely I'm lending rupees 1 lakh, whereas in the case of corporate banking, I'm averagely lending rupees 1 crore, right? That's the ticket size. So customer base is quite small in case of corporate banking, but ticket size is quite large, so that the diversity is lesser in case of corporate banking and more risk is there. And if we talk about the returns are quite good in case of retail banking as compared to that of the corporate banking, because the spreads are quite good in this scenario, and also in case of corporate banking the spreads are not that much good, right? So that is the main difference between the retail banking and the corporate banking. So that would be all related to this video. I hope that you must have enjoyed the session over here. So do rate this session out of 10 at the earliest, and further do let me know in the comment section if you have liked the video, and do like this video and share this video among your friends and colleagues. And further, as I have already told you, that you can simply visit the website jaib.learningsessions.in. So this is the website that you need to visit, and further just sign up over there, which is free of cost, absolutely free. And after sign up, navigate to the PDF section so as to access the PDF of all the 4 papers of Jaiib. So that will be all. Thank you so much, and see you again in the next video.